I'm really excited about this video because I'm about to give you guys 3 heavily discounted top quality dividend stocks to buy here in July 2023 that potentially could supercharge your portfolio. So if you're looking for top quality undervalued dividend companies with the potential for long-term growth, well then you're in the right place. If you actually like today's video, then don't forget to smash the like button below and subscribe to my channel for more weekly videos just like this one. So let's get straight into the first stock of the day, and that is W.P Carey, ticker symbol VPC. It is one of the world's largest net lease landlords with nearly 1,500 properties located all across the globe. And their great diversification to different sectors and different locations does help them to mitigate their overall risk, just as their extremely high occupancy rate does. When looking at their share price performance, well then we do see that they're down by 12.5% year to date. And when looking at their performance over the last 12 months, well then we do see that they're down by nearly 19%. So their share price has definitely tanked a lot over the last 12 months. And when looking at the right hand side of the screen, well then we do see that they're getting really close to their 52-week low, and that they have a P to FFO ratio of 13. And the P to FFO ratio is sort of like the equivalent to a PE ratio, but for real estate investment trusts. So a P to FFO ratio of 13 is actually pretty good. When moving on to the dividends, but then we immediately see that this company has a really high dividend yield of 6.24%. They have a dividend payout ratio of 82%, and that for a REIT is very normal. They have a 5-year growth rate of only 1.03%, and that might not seem like a lot, but when you consider their already extremely high dividend yield, then growing that even further is actually pretty good. They have also consistently been increasing their dividends for the last 9 years in a row. I personally think that VPC would be a great share to put into your portfolio, and I have actually recently bought up in VPC myself due to the great valuation. It is a really solid company that is right now trading at great value. The second stock on my list for July is Amgen Inc, ticker symbol AMGN. They are one of the largest biotech companies in the world, and they have millions of patients all over the world, and they have a lot of products that have a huge potential. They are also one of the oldest biotech companies. When looking at the share price performance of Amgen, then we basically see that the year to date are down by 14%. And when we look at their performance over the last 12 months, then we see that they're down by almost 9%. So they have definitely taken some hits here in 2023. When looking at the right side of the screen, well then we basically do see that they have an EPS of 18.20 and they have a PE ratio of 12.5. So their financials are actually looking pretty solid, especially for such a high quality biotech company as Amgen is. When looking at their dividends, well then we do see that they have a dividend yield of 3.79 and they have a payout ratio of 45.5. And even though the payout ratio is a bit high compared to what I would like, then it's not something that is really concerning to us as investors. They also have a 5-year growth rate of 10.5%, and they have consistently been increasing their dividends for the last 11 years in a row, and that is officially making Amgen a dividend growth company. Overall, then is Amgen a top quality biotech company trading at great value, and their dividends are extremely good, and they have consistently been increasing them for 11 years in a row. So moving on to the third and last stock on my list of stocks to buy here in June, then we have Crown Castle. This is actually another REIT that is just like the first one, trading at great value. So when looking at the share price performance of CCI, then we see that the year to date are down by 16.5%. And when looking at the performance over the last 12 months, then we see that they're down by almost 33%. So their share price has basically plummeted during the last 12 months. And when looking to the right hand side of the screen, then we do see that they have a P to FFO ratio of just below 15. And that is really good for a company of this quality. And moving on to the dividends, then we do see that CCI has a dividend yield of 5.42%. And they have a payout ratio of 82%. And even though that might seem a bit high, then this is completely normal for a REIT, and that is nothing to worry about at all. They have a 5-year growth rate of 8.5%, and they have consistently been growing their dividends for the last 8 years in a row. Overall, then CCI is a great REIT that is right now trading at a really good value. So these were basically my top 3 discounted dividend stocks to pick up here in June. Let me know in the comment section below what you think of my stock picks. That was all I had in today's video. Thank you for watching the video, and if you actually liked the video, then don't forget to smash the like button below and subscribe to my channel for more weekly videos just like this one. See you in the next one.